Hello and welcome back to the show. So I am super excited today to sit down with my guest, Vance Lowe, to talk a little bit about how we can actually become the bank. So Vance is my guest today, and he is an expert in different investment strategies, but one in particular, as far as how we can actually become our very own bank. I'm super excited to not just learn this strategy and get educated on it myself today, but also being able to kind of share this conversation with everybody here. So without further ado, I want to bring on my guest. Welcome to the show.
Thank you so much. I've been waiting for an opportunity to talk to you and the people who listen to you. Because when I grew up early on, I was very fascinated with money. You know, when I first discovered how money worked, is my parents had a magic kind of register. They would open it up and they would write out the amount of money that they wanted, sign their names, and they could buy anything they wanted. They checks.
Right,
And I
checks.
thought, wow, I need to get me one of them. Have all the money. And then it was, wow, I wish I could own the bank, now to have all the money in the world. Okay. Well, that's the way the United States used to be. There's a lot of things that I've learned along the way that are really good and positive, but some of them were a little bit diabolical. Our nation grew up and became the most powerful nation in the history of the planet fast. And there was a reason for that. We wanted our independence. Every family unit was an independent unit. In other words, they could put all their possessions in a covered wagon and go out in the wilderness and survive. And that's what they did to conquer, to settle,
Right.
the West in the United States. And they survived. Could you imagine a family doing that today? If we still had a wilderness, they'd be dead in 30 days. You know,
Right.
I mean,
Yeah.
because they were out in the middle of nowhere, Indians and everything else, whatever it is. And so, but it made our country strong. They didn't keep money in banks. They kept money with these life insurance carriers, and many of the life insurance carriers grew up because of this need. We've got New York Life, Metropolitan, we've got all these participating mutual whole life insurance carriers formed a group of people who got together and formed the company, and they owned the company. Okay, it wasn't stockholders or anything else, but they had to solve this equation, this who's going to take this responsibility. So agents would come in and they would do the transaction. They would get some life insurance, but they would take money, they would take precious metals, they would take deeds to land. And, death was a lot quicker than it is today. And so, they'd name beneficiaries, and that's how life was. See, everyone in America starting out had an education how to go out into the wilderness and start their own town. Now, anywhere in your education, did any of your teachers ever tell you that you were supposed to go out and create your own economy slash town?
No, if they did, I definitely missed it. So I don't think that was one of the subjects in the school that I went to.
Yeah, I did a lot of ditching when I was in school, but I never came across that either in college or anything else. So I found out here within the last 20 years why that is, and that was purposefully taken out of America. See, in 1900, we were the richest nation on the planet. Okay, totally ripe for the picking. And we lost a war. America doesn't ever think they ever did lose a war, but they did. And if you really want to know what went on and how it happened, you need to read The Creature of Jekyll Island. See, they brought in the Bank of America, first Bank of America. There's a commercial bank. And I think it was Jefferson who said, if this ever caught on in America, it would be the demise of our nation, and just slammed it. Well, this guy was extremely wealthy, but he was not American. Now, by being wealthy, I mean extremely wealthy. He was so ticked off at the president just because, he actually lost a lot of money. He brought 4 friends with him to Jekyll Island, and they met for 2 weeks. And at the adjournment of that meeting, the Federal Reserve was born. They went back to the president and told him, "You will do it our way, or we'll crush you right now," because those 5 guys owned a quarter of the wealth of the world at that time.
You said a
Every
quarter?
quarter of the wealth of the world.
Wow.
Okay. So, yeah, we can stop this. We can stop your trade. We can do it all. We're going to crush you. You're going to come this way. And they have run our nation, our country ever since. And none of them were ever Americans. They were socialists and communists. And now you can kind of see what our government is headed into if we don't stop it. But the first thing they did was the Federal Reserve that created the IRS. Through our government, it was the Federal Reserve that created Social Security. Social Security was a hard sell back then. People were pretty smart. And so it took several years, and they had to make all kinds of promises. Look, we'll just tax you on the first $13,000 of your annual income and never increase that ever. And it was in the newspaper. There's newspaper articles all over the place. Well, it finally passed, and they kept their promise for 13 years or 7 years, one of the two. And now it's unlimited. They're going to tax. What's strange is that Social Security was only created for the islands that America controls. It wasn't created for the 50 states. Neither is federal income tax. It was created for Washington, D.C. and the people who had the federal jobs. So it was only Washington, D.C. residents under the with federal jobs had to pay federal income tax, not the 50 states. So you can kind of see how things have evolved in interpretation, but there is no law other than that right there. So the hideous thing that really happened was they mandated control of our education system and immediately put in socialism. You remember going to kindergarten and you had a list of school supplies,
Yeah, I remember
crayons and
that.
pens and paper and everything. And the first thing they did is they put it all in a pile together and say, okay, now we're putting it all here and we're going to share. Everything's going to be common here now. And we're going to get in lines and we're going to wait in lines. That's 100% socialism right there. And then they took out the education that made people independent thinkers and the ability to create economies. See, money has to move. In banks right now today, money doesn't ever sit. There's no value in money at all unless it's in motion. And so 2 o'clock every single day, money moves forward with the sun. 2 hours, okay? And it moves around the world and back into the hoppers the next morning. And they make what's called bit points, fractions of a percentage. But if it's on billions of dollars, they still make a chunk of change just moving the money forward because money has to stay in motion. Now, we're taught 2 things, which are opposite. Number one is that you let us be your bank and we'll take care of it. And whenever you have excess money, we need you to put it in accounts and get interest on it. Trying to teach us that interest is how money's made, and it is not. Okay. And they have us chasing interest rates and interest. That's everything we do when we do mortgages and everything else. It's all about the interest rate. Well, in the United States, which is really funny right now, this is the only country that allows our mortgages. Our mortgage contracts are illegal in almost all other countries. because it's a fraud. It's 100%. A lot of people think, oh, I refinanced and went from 4% down to 3.5. Okay. Well, in actuality, no, you didn't. And you lost 65 to $85,000 to do that. What do you mean? Well, you have to start over. Okay. And you will never, ever pay that interest rate until the very last month of the 30-year contract, 360th. It'll finally get to and just barely be at that 3.5%. Every single payment before then was much more, starting over 95%. Now, if people don't believe that, I know your audience does. They understand that. But the first payments that you make are all interest, very, very little in principal. Okay. And what does everybody do every 5 years? They refinance.
So
So
they go
folks,
right back.
yeah, I've taught you the real reason mortgage rates fluctuate. They tie it into government or whatever else, but 20% of the population is going to do something every year. Okay. They either have to sell because they're moving, or whatever else they want to. And so if rates go up and people are forced to move, or okay, they're going to get stuck with those rates. But the second they come down, guess what they're going to do?
Refinance.
On the average of every 5 years.
Yeah.
What if people had a system where when they purchased a home, it was completely bought in 5 years without changing your lifestyle? If we're the bank, another thing about money as it moves forward is that the people who have our money, when we put them in stocks, mutual funds, or bonds, or everything else, we think our money's working. It's not. It's dead asleep because we have to leave the money there. It's the people on the other end who receives the money who put it to work. The average doubling of money is every 2.5 years. Now, how much of that are we getting? All these people out there with 401ks, tying it up with government, which is not a good idea. How often is it doubling for them? I haven't talked to somebody in several years. Oh, well, my 401k has doubled. Well, is that because you put the money in, or did the investments double? So they don't. It's not doubling. So we think that's the right thing to do. One of the things I just want to put out here, everything that I'm saying and all the basis, the framework, the go-to material is in a book called Becoming Your Own Banker by R. Nelson Nash. And I've been in a career all my life, almost 40 years managing assets for people, helping them retire independent, and had very, very good success ratio. Well, I'm one of those people that one of the clients come in, give me a book, and totally screwed up my life. Totally. That was the book. I got it because I always was hunting for things like this. We would get close, but we wouldn't understand it. I called Nelson up. You guys can read that in one of my books. I'll get to it at the end, but be sure and tell me. But you can hear kind of the story of how I sold that business and started working, actually for clients, thinking before I was working for clients, when I was working for banks. In all of our businesses, guys, as agents out there in real estate and every place else, we work for and on behalf of the banks. The banks are the ones who want the money. And eventually they're going to end up with it if we don't do something. But everybody's heard of these Rockefellers, the Trumps, okay?
Right.
And some of these rich families out there who just seem to defy, no matter what, they just get wealthier, don't they?
Right. It's like they have some kind of secret, right, that they're not telling the
Right.
world.
And they do. They do have the secret, which is exactly what we share. It's being your own bank. It's being able to self-finance in a world where it creates no taxable events. Remember Trump, when Hillary slammed him at one of the elections, said,
Yeah.
you don't pay any income taxes. And he put that smirk on his face. Remember how he's famous for that smirk?
Right.
He smirked and said, "That's because I'm smart." And that was the end of that. Okay. He is. So when you create and set up your own environment, okay, your own economy,
Mm.
you don't trigger any taxable events. So you don't have to worry about paying, an entity, any money anyway. So the money coming in, maybe they have a claim to it if you believe in federal income taxes. But once that's cleared, once it enters your economy. So I'm going to use a different word for economy. I'm going to use town. We were supposed to be educated from kindergarten through master's degree to go out and start our own town on a family unit, okay, with our wife, our kids, everything else. Let's just talk a little bit about town so that everybody knows where I'm coming from and where we're going. It's running your own personal assets and affairs like a town does. So I'm traveling. I stop in a little town. I'm empty. So I fill up with gas. For me, it's $50. Okay. So now and then I'm on my way. But now town has $50, doesn't it? My $50. Well, that gas station's going to say, "Oh, okay, $50 here. I'm going to go buy groceries." So he goes over to the grocery store and buys $50 worth of groceries. Now the grocery store has my $50. Okay. The grocery store says, "Hey, okay, I'm down on inventory. I want to go buy $50 more inventory." So he goes across the street to the warehouse and buys $50 worth of inventory. Now the warehouse has my $50. That guy's going to say, "You know what? Now I've got enough money to go pay my doctor bill." So he takes it over, pays the doctor in town his bill. The doctor turns around and says, "You know what? There's enough money to fix my car." So he takes it over to the gas station. It could be back to the same station. Okay. Now he's got the $50, and that guy turns around and says, "You know what? My kid's got a birthday. I'm going to take him over to the restaurant and we're going to spend $50 on a meal." So how many times in one day did my $50 stop once it was in motion? It could be $400, $500, $600 worth of value. Every time a dollar stops, it creates a new dollar's worth of product or services. So this is what we teach people.
Right.
If I could show you how to get back 100% of your monthly expenses, would you then be spending principal? Because we know we're not supposed to spend principal, right?
Right.
But nobody around us does that. But if you got it back, then you wouldn't be spending your principal, would you? Now you can live that law. There's 3 laws you got to live. The 10%, you got to pay
Yeah.
yourself first and put the money to work. See, you can work for money or you can have money work for you. And you got to make a transition when you start. You're going to go work for money, but as long as you have and set aside more money to work for you, pretty soon, you don't have to work for money. Okay.
Right.
But in this case, you want it out working for you. Principal is the money we bring home, in our paycheck. That is principal. We can't spend it, but we can put it to work. And if we're the bank, let's just ask the audience out there, does the bank always get the money back? Answer is yes,
Yeah.
always.
They
And
make
so
sure of it.
they make sure of it. A lot of people say, well, except for the bad loans. Even with the bad loans, banks, it's called collateral.
Right.
Banks will over collateralize you to death. They want a minimum of 10 to 1, but they would be much satisfied with 10,000 to 1. There's no limit. You got to borrow $10,000. We want the inventory, well, the inventory is $1.5 million. That'll do.
That'll do.
That'll do.
Yeah.
You see what I'm saying? It's called control. That's what banks are in business for, is control. So What if we took the banking equation back in our life and we started practicing our own little economy? And inside not only getting the money back, what if we could move the money around in our economy, and every time it stopped, we could get more than $1 use? Now that's got to be exciting to people, because no one probably in our listening audience can ever get more than one use out of a dollar before it's gone forever. But the banks always get the money back and they reuse it. And the reason the economy is in trouble is because the banks cheat. You and I, even if we're running a bank, we can't create money out of thin air like the banks do. Every dollar deposited creates $10 that they can lend out. They got to keep one in reserve, and they can lend out the other 9. Well, what does that other money come from? Thin air. It's thin air. And so this is why there's so much money lent out that if there was any type of a run on the banks, they have no way to cover that debt. And we used to tar and feather when banks first started, appearing on the horizon. If they over lent from what they had, they were hung, they were tarred and feathered, they were run out of town. We did a lot until the Federal Reserve passed laws to protect them and allow them to do this type of thing. So what's a dollar worth today compared to 1900? It's less than a penny.
Wow.
And
Less than a
that's
penny.
less than a penny. Because remember, in 1900s, they used to be gold, solid gold coins. Hey, $10 gold piece, all those types of things. That's what they were worth. And now the true value of those coins are 13, 2000, whatever the market is right now. Okay. So if we can build our own economy and not worry about taxes, we don't have to have that siphon. If we're always paying 10% and we're never spending principal, but we're putting it to work, then the money's always coming back to us. We put it out for cars, it comes back. We put it out for living expenses, it comes back. We go buy a mortgage, now we're paying someone else, but we take and funnel our money and we buy the mortgage. Now we're making all that fantastic interest coming in. Okay. Mortgages are great to have. Pretty soon it expands. Hey, family, we got a family bank now. You already qualify. Okay. If anything happens, family bank's going to work with you because you're family, as long as it's legitimate. If you try to take money and decide to default on the loan, then, like a regular bank, we're going to collateralize and then we'll send you a certificate. We hope you enjoyed your inheritance or whatever. So that's kind of what we do here. We teach people how to set all this up and run it. And here's the exciting news. It doesn't take 30 minutes a month. It's not going to change your life. It's not going to change the way you live. The only thing we want to change is who gets to end up with the money. And that's easy. Okay. Never spending principal. That's easy to convert to. We don't even have to be present. We send them out a little video, 20 minutes. Everybody, we've never had no one not agree. Yeah, if I do this, I'll always get my money back, 100% of it. But it's not the way people think today in the herd mentality. There's something missing, and that's the bank. That's the lending company. So where do we store our money? Well, those contracts still exist. That's what the art was lost. The strategy was lost, but the mutual companies are still there. And those participating mutual whole life insurance contracts still exist. And so those you can tailor and put together into a banking contract. You have to go with a friendly company. Some of them that I've mentioned are okay. The others, they also have stock divisions. If mutual companies have stock division, the stockholders, they want to keep the cash value so that the profits go out to the stockholders. Where in a mutual company, policyholders are the owners and they get the profits in addition to the guarantees. So when you park your money in the bank, you can get net returns of always what the market's doing. Okay, but it's guaranteed. So like 3.5% right now, but there's no taxes. But in addition to that, you get profits on top of that. Well, then, hey, there's a debt I could go buy. I could put my money to work. I can make 18% on that. So you're going to pull money from here and buy that. Now you're getting 18%, but you don't lose the interest there. It's still there
Right.
because what you do, you're an owner and you leverage against that to the actual cash reserves of the life insurance company. So folks, there's a lot to learn here. I hope this is fun and fascinating because there is absolutely no risk. There's no market risk. There's no economy risk. There's no legal risks whatsoever. The only risk is if we steal from ourselves. So I'm sure our listeners have heard that startup companies, it usually takes 5 years to make a profit, 3 to 7 years. And the funny thing is that 10 businesses that start up, 5 of them will be defunct in the first 5 years. The sad news is that in the next 5 years, 4 more will be gone. And the number one reason is because the owner stole from themselves. You create a company because you're good at what you do. And then you're under the false understanding, you know what, if I do this, I'll get it all wholesale. I'll be able to take mine free. I own the grocery store. I get all my groceries free. That's what's in Nelson Nash's book. And there's a famous grocery store story. And people, anyone in America can relate themselves and their families to that grocery store. If they want to be profitable, they want to retire, independently wealthy, you can't steal. You got to go through the cash register, and pay retail for everything. And so it's the guy in the mirror, gal, whatever. If you steal from yourselves, it won't work. So I've done too much talking, I'm sure. So fire some questions at me, whatever you want.
You're good, man. So I actually, that was a really good, I think, probably like 20, 30-minute just summary synopsis of your strategy. I think it was really helpful because, when I first listened to this on another podcast, actually, it was, it was brand new information, right? And like you said, I think a lot of people, when they hear it, they're going to immediately in their mind, especially today, default to, well, this doesn't make sense because the banks are not involved, right? So where does my money go? So just to kind of clarify that, right? So in this strategy, we don't need any banks,
No,
right?
that's
There's
that's
no
not
need for
true.
banks.
No, that's not true. We have bill pay, we got all kinds of things that the banks can do for us. We just don't store money at the banks. And
Got
there's
it.
a real big reason right now. It's the Dodd-Frank Act. Dodd-Frank Act was passed back when Obama was first put in as president. That law states, remember the bailouts, and the first bank robbery, the biggest bank robbery was done by government. I think it was $7 trillion deficit, that they had to create. It wasn't true. They did another 16 trillion privately and gave it throughout the world. That was the first one. Now look what they're doing. They're in the trillions of deficits. It's just money's just nothing. They're doing some things, but anyway, yes, we need the real banks, but we don't store any money with them. We store it in our bank and then we transact business from our bank, but we take every advantage of the real banks we can because of bill pay and things like that. So yeah, we keep money there. We have to keep a checking account to pay our bills and things like that. So this system shows you how you do both.
Got it.
So we need both. And, but when you store money in your own system, it's like it's off the record. They can't see it. They don't know what's there. They don't know what it earns or anything else. Okay.
Got it. Yeah. So this makes more sense now, I think. And that's actually really good that you explained it that way, because I think when people first hear it, when they think, oh, no banks, they immediately default to, just eliminating banks from the equation. So this, I think will put a lot of people even at ease, right, for that strategy, because it's not necessarily eliminating the banks. It's just eliminating, the way I think of it is like, you still have your checking account. You just take away that savings account, right? That you don't use that anymore. So you're saving it in your own, your own bank, right? The one that you created through the life insurance strategy contracts.
Yeah, in the real banks, you only keep enough operating capital.
Right.
Okay. Because some people own businesses, like a lot of our listeners, they run their own business and they're LLCs and things like that. So they've got to have a business account. We've kind of switched to trusts a lot. We have trusts and we pay the trusts. And it also helps on the tax issues. So, oh, there was an idea I wanted to share with the real estate people. I've been in real estate all my life, especially, income property, and I'm on the other end now. I'm selling, when I have been. I'm not selling now because prices are down, but I followed Kiyosaki, quite a
Yeah.
bit. But our strategy works very, very well for this profession, for real estate agents. We've got a lot of clients that are, real estate agents, and we teach them how to resell clients every 5 years. You go back and you revisit with a client you sold this income property to, because in 5 years, if he's living the strategy, he'll own it outright.
No.
Notice I didn't say pay off. Remember, we want the choice of who we make the payment to, because money has to move. If it's paid off, we don't think we need the money back. I mean, we put a lot of money into that mortgage. Okay. We need it back. Okay. So we buy the debt and that payment still comes back to us when we buy the car. Okay. We want to use our hoppers to be able to buy that car, put that principal to work. Now we want those payments coming in like clockwork. To want your
Right.
interest, your earnings. This is a good for the audience. When you self-finance, you want your earnings high or low.
Want to earn them high.
We could charge 50%.
Right.
It's not about getting all the money back. It's about the money at work, right? We want the highest interest we can and no taxable events. Now, if you go outside the family or the extended family and you charge interest, Uncle Sam says, hey, you got to declare the interest as income. Okay. But inside the family, you lend to your brother, he pays you back, he pays you a little bit of interest. That's not I don't know what the IRS will say about that, but that's not a taxable interest in my
Right.
affair. So
Right.
yeah,
And
that's things we do.
yeah, that's so you bring up for an interesting point actually. So I'm listening to this, and when you say family, right? So basically in this strategy, it sounds like that you're getting everybody in the family together and they're forming one bank, right? They're forming one bank using everybody's income. Am I kind of correct on that?
Um, Ultimately, if we could convince everybody to do that, yes, that'd be the most powerful thing on the planet. Let me tell you where that strategy comes from. Remember the famous family, the Rockefellers?
Mhm.
The Rockefellers and the Rothschilds, those two barons died in the same year. One left an inheritance, the other one disinherited his family, but gave them access. And that was what's the first one I just said?
Rockefeller.
Rockefellers.
Rockefeller. Yeah.
Okay. And in a trust, and had an executor require the family, to honor the trust and do it, which
Mhm.
was you lend the money, you borrow the money, but you have to pay it back with interest. And you have to keep the money in the family. Well, he gave him, I mean, there was a lot of money back then. I mean, a lot of money. And so I don't know, there's a lot of kids also. Back then they believed in big families. Anyway, they had to meet, they had to run that board, so the kids were all on the board and they changed president every year. So each of the kids had an opportunity to do that. And this was one of the younger brothers in this, because I read this book on them, and they were in and they had a dilemma, and the trustee was just eating their lunch, because if they didn't honor that, he could take the money and give it away to charities and they'd lose it all. So it was keeping the money in the family, and they were making so much money. And one of the sisters says, hey, can we get this meeting over? I got to go shopping at the mall for the school clothes for my kids. And the light came on. He said, wait a minute. Do we own that mall? See, keep the money in the family. So if you go shop somewhere, we got to own it. You go buy a car, we got to own the dealership. And the rest was history. Do you have any idea how much this extended family is worth today? Nobody does. They know it's over 70 trillion.
Wow.
Okay. They can completely manipulate the precious metals market, in a day. They're so powerful. That's unbelievable. But a lot of the rich families never lost the strategy. Okay. They self-taught it. And Nelson Nash in his book brought it back. Okay. So that it can be retaught and we can put the equation back in. But that's how we get to this. That's why we say family. You start with yourself. How hard, if you've got brothers and sisters, you can't teach them anything. They know you. Hey, you're a screw up. So, and I did it all wrong with my kids. I tried to do the same thing. I said, look, we got a family bank. I want you to finance all the cars and everything here. Well, how much interest are you going to charge, Dad? Oh, no, we can get it for this. And I thought, well, I've really screwed this up. So you drop bombs now. All you do is you tell them your success. You go out and say, hey, I just figured out how to get back 100% of my monthly expenses. How are you doing? And then walk off. Stop. You never explain. And then you come back and money, because it comes up all the time. And as soon as it comes up again, oh, I just figured out how to use $1 more than once and get it back, use it again. How are you doing? Pretty soon they will tackle you. They'll turn around and say, look, you can't keep saying that. You can't. Can you really do that? This is my results. This is what I'm doing. This is how this new strategy is working for me. That's why I'm sharing it. Well, what is it? Oh, just go over here, read this little book and let me know. And then walk off. Family members have to discover it for themselves. Now you're going to direct them and lead them. But yes, as soon as a family member comes in and says, whoa, this is great. I can actually, the best way we did it was to announce that the family bank is buying existing car loans. Well, what does that mean to me? Nothing. The payment, instead of going to Bank of America, is going to the Lowe Financial Bank. Okay. Just anything, and the payment and the payoff still the same for you. But because that volume of return is higher and we had to buy a lower amount, we're making a much greater interest rate. This is why loans are bought and sold. Okay. So, okay. And then you can earn equity in the family bank. You want your earnings high or low? They'll say high. Well, that's, we can charge a little additional interest, and that will be your share of the bank. And that will entitle you to borrow more money, as we go along. And you should be getting and setting this up on yourself as well. So he gets his own bank, he gets his own, policy and starts putting money in. Then another family member, and then pretty soon you suggest, well, why don't we have a trust own these policies? And we put them on everybody. Now you're talking history. One generation to get into the multi-millions of dollars. Doesn't matter if you start in poverty.
Right. So this is
generation.
This is really interesting, right? And I just have a couple of basic questions as far as the strategy goes, and talking about generational wealth, right? And you said just one generation, you can start in poverty, and in one generation. So this is how real generational wealth is built, and so it's important to have some of these things just to get cleared up. So as far as the infinite banking strategy, right? So when you first start out, you do it yourself. And the amount of money that you're saving in the life insurance policy, the contracts, however much you have in there, that's how much you can borrow from it, right? So you remember saying, we're not creating new money. So if I made $1 million, right, in a year, and I put it all inside of that policy, I can only borrow up to $1 million. I can't borrow 2 million from that.
Right. But also remember, what people don't understand is you're now into multiple touches. Say people, it doesn't add up. What do you mean I can own my mortgage? I ask people every time they come in, they give me their debt. Sometimes they come in crying. We're here to see you, or we're going to take out bankruptcy. Well, how long do you think it's going to get out of debt? We're never getting out of debt. And I just say, well, hey, if I can get you out of debt before never, do I get the difference? And they've never said yes. But, 5 years is the average, because there's no way I can do this. Yeah, just follow the numbers. So we set people up to take it for a test drive. We have people bring their numbers in, and then we show them month by month. And all we're going to do is math. We're not going to put any projections, any growth, or any. We're just going to do math, and they're going to look at where they're at 96 months later, and whoa, I want this in my life, or I don't. That's how simple it is. So it really is easy to do, but you have to have the education and the knowledge. And so, how do we teach somebody 18 years worth of knowledge in just a short time? Well, we build their own libraries of information. We record everything we do, just like these podcasts, but we do it on an individual basis. We send it to them. And then we send them other videos, and they start building their library. And so in just several short presentations, they have it all, but they're not ready for it. See, Nelson Nash's book, that's the complete resource material. And my guru, he said, I want you to read this every week for 6 months. I memorized the book, but I called him up and asked him a question. Now, this guy was not a nice guy. Nelson said, hey, he'll teach you. Okay. He'll teach you everything there is to know, but you won't like him. And I said, I need to know why I need more than one contract, because I thought I could just figure it out, build one big contract and just have one policy. He said, no, it's a series, because you'll outgrow it. And you can't increase one once you get it started because of the stupid laws. But so I called him up and said, why do I need more than one contract? And have you ever been held on the phone for 30 seconds, complete silence? It's an eternity. I go, hello. He said, have you been reading the book like I told you so? I said, yeah, I've got it memorized. He says, nah. The apples, something like the apples sure falling a long way from this tree. What does it say on page 34? Click. He hung up on me, and I'll be dadgum. It was there. It wasn't there the day before.
But it was there that day.
See, people have to internalize everything. So we want to make sure they get it, because before, in my earlier career, my other life, I drove everybody's car, their financial plans, everything. I was the guru for it. I'll burn out on that. I don't want to drive your car. So I'm going to give you all the information. And you know what? You will never need a financial guru. It's so simple to double assets. We show them, look, if you buy this, here's your volume rate of return. Does 60% per year sound okay to you? Yeah. Well, then how often does that double? Every 2.5 years. So 60% volume rate of return is about average for, what you're buying back. If you're paying $500 out on a payment and you buy the debt, and now $500 comes in, people think that's a $500 difference. That's $1,000 difference. Okay. From riding and losing to receiving net. Okay. So yeah.
Absolutely. So it's a lot of good information that we're getting. I think you're exactly on the money there, no pun intended. As far as the information, right? There's a lot of good information, and just in this, 1 hour period alone, a lot of good information. I think people will want to rewind and re-listen and rewatch this. And so, and I don't know if you're able to do this, but if I were to say, I came to you and I said, I have $100,000 in debt, right? So what would that look like as far as, maybe just like an overview of the strategy, and somebody who is currently in a negative position being able to do this?
Okay. I've been asked that a lot. On our website, I have a whole bunch of podcasts. One of them is called The Kyle Doctor. Okay. They came in crying. I had two people two of their sons in University of Michigan. He was a chiropractor, and he was misdiagnosed with Lyme's disease and couldn't practice for 2 years. And they were $500,000 in debt at over 16% interest rate. And they were on their last leg. Well, in the podcast, we show them how fast they got out of debt and literally got things paid for. That's probably the best place to go, because they can download that and listen to it all on almost any other topic: self-financing of cars, equipment, real estate, those types of things. They're there. But again, we would entice people to take this for a test drive, learn something, get Nelson Nash's book, get our free book. You can download the audio version or a written version off of our website. That tells you more of my story, how I got involved here. But we'll have a conversation one-on-one, and then we'll send out what we call a little intake request form, so you can put your numbers in. Here's my debt, here's my 100,000, and here's how it's broken out. And then you also put your assets, okay, if you have any, and your income and things like that. And you'll read Nelson Nash's book. That gets your head in the game. Just that right there, okay? It puts the questions, your thoughts, everything in, so that as we make the presentation to you, we'll record it. And it's your numbers. The only difference is we'll call it Theory Day, because I have to make the choices for you. But I'll do a very conservative, doable little plan, okay, that I know it will be a cakewalk, okay? But people will be able to see the reuse of money and how fast it buys debt. And if we're getting the principal back every month, just imagine how life can be. And then we think, well, gosh, this has got to be complicated or hard. For me, I'm running 4 companies, 100% on this strategy. Doesn't take me 30 minutes a month. So we go through that whole time frame and share that with everybody. So that's really, I hope, I didn't want to avoid the question that you had, because they did get out of debt. And I think it was, if I'm not mistaken, 56 months, they had all their debt bought. And he did it on 2 office patient visits a day. That's how he put it. I can afford 2 office patient visits a day. That's $20,000 a year is what he put in his bank. That's all. Now, does that add up to $500,000 in 8 years? No, not even close.
Yeah.
Okay, not even close. So how does he end up owning all of that money? It's because he's able to buy debt, and the money that was going out is now coming in, and it starts compounding like crazy. It's called exponential compounding, where compound compounds.
Wow.
And we've never been in that world before. But you just, all of a sudden, you discover you're already in it, and you didn't know how you got there.
That's honestly like the best discovery, right? When you turn
Oh, it
around,
is.
it's like,
Can you see the dilemma? See, I was in the middle of, I was having a hard time with my partner way back when, he was giving me grief, and I was doing an annual review. This guy comes in and bring me Nelson Nash's book. It wasn't 3 days later that I told my partner that day has come. He said, and he knew what I meant, because when I brought him in, I said, one of these days you're going to make me a lot of money, because I'm going to sell you the business. And I did. So it's that true. It's amazing where the golden nuggets are, the truthful things in life really are, but you have to be aware of them, and you have to be willing to learn them and stop doing the things that are counterproductive.
Yep, absolutely. So this has been a really, really educational podcast, not just for me, but hopefully for everybody listening to this. And you brought up, again, a really good point as far as all the information that you have in your website and your podcast that you have recorded, and including the book that you have as well. So for our listeners or viewers out there who want to get more information, right? They want to learn more. What are some of the best ways to, get to you or get to your information, or be able to kind of follow along the educational journey and get started. So reading the book first by Nelson Nash. What was the name of that book again?
Becoming Your Own Banker. That's the 5th edition. You can download it off of Amazon for like $10. Okay, places to go to. And to avoid what I call the pornography of this topic, nelsonnash.org or ibc.org is the Nelson Nash Institute. Okay. Everything on there is pure. Okay. There are some things on YouTube. My website is pure, all about banking. It's when you get into anything that would do something that's not absolutely guaranteed. Things like universal life, indexed universal life. Oh yeah, we do the IBC, and we do it with universal life. You got to stay away from that. Certified practitioners are the best people to be with the Nelson Nash Institute, and stay away from, oh well, if the mix isn't correct, you're getting ripped off. Because these people, all they do are sell product. They don't set up the strategy. Okay. And that's critical for me. I retired 20 years ago. I only work 3 days a week. Okay. I have a passion for this. If I get you or someone else to do this, this is a punch in the nose to the Federal Reserve. Only 10% of the United States has to switch back to self-banking to implode the Federal Reserve. We're that powerful. Well, 10% is the saturation point on any marketing, right? That's all it takes. There's economists there, part of the board, it's all about the Austrian economics instead of Keynesian. See, our government is run off Keynesian, which is a never-ending dollar. Where Austrian economics, there's only a set amount of dollars, and that value just increases over time. So two opposites.
Yeah.
That's the website to go there, guys. It's just called privatebankingstrategies.com. That's plural, privatebankingstrategies.com. And you can just look there. If you sign up for the podcast, we do podcasts on a regular basis. You'll get notification whenever we do a new one.
Awesome. Well, Vance, I want to thank you again for being on the show and sharing this information with all of us. And it really is really powerful and profound for anybody listening to this, but it's really useful. And for all the talk and all the, the hype out there for building generational wealth that are, we see emerging, in conversations, this is truly, I think, a good breakdown of what that really looks like, right? Especially when you started telling that Rockefeller story, that's what I was thinking, all this talk about generational wealth, right? What does that actually mean? And I think this is a good first step as far as being able to do that. So I want to thank you again, Vance, for being here, sharing your knowledge. Was there anything as far as last tips, last kind of little nuggets you wanted to leave with us before I let you sign off here?
Just try to live the principle you've chosen not to. Live the 10% law. Never spend principle, and work off of a well-defined financial plan and update it regularly. You can fall on your face financially over and over again and you'll still succeed. But you can't even come close if you don't live those 3 laws. All right. Thanks so much.
Awesome. Thank you so much, Vance. Thank you. Take care.
Bye-bye.